Simon Bevan, do you see his comment?
I didn't yet. All right, we are live for Friday edition of the Mike and Mario Show. Excited to be back. Looking forward to connecting. Lots of things unfolding as we speak. Looking forward to diving into it. But first, before we do that, Mario, how you doing, my friend?
I'm doing well, Mike, and you?
Not bad. Not bad at all. Still plugging along, trying to make sense of this craziness out here. And as always, more distractions, more pulling this and there, but a lot of geopolitical tensions on the horizon as well, which I think is worth talking about. But I guess where do you want to kick it off today, my friend? Where do you want to touch on first? Lots of stuff worth touching on.
Yes, I think this week will be remembered, probably looking back as the week where the Fed lost a lot of credibility and where they've lost the fight, not just against inflation, but inflation expectations.
Yeah.
We had the CPI earlier in the week, but I sent you the link. We had another data today. It's called the University of Michigan Consumer Confidence Data, and they have a few components about employment and inflation expectations. And I sent you that chart.
Okay, let me go ahead and pull this up here.
Because the Federal Reserve always goes on about inflation expectations.
Yeah.
And can you scroll up a little bit? Yeah,
you
can see that.
Oh, no. Yeah.
Right there, yeah.
Yeah.
Just the date on the chart, if you could bring it up a little bit. The
Okay,
date.
let me, yeah.
Yeah, there you go. You can see up until just before the middle of this year, inflation expectations were around 2%, even below 2%. But well, last year, sorry, last year. But now, look at how it's increasing, and the Federal Reserve always talks about inflation expectations, and they're losing control even of inflation expectations. So I think that's very significant.
Yeah.
And I think they're trapped. So that's the big news this week, I would say, in terms of the economy, in terms of prices.
Yeah.
And of course, like I said, there's so many other distractions. Maybe you want to now step in and talk some of those.
So this week in general, there was no surprise that the number that was going to be thrown at us at 6.2% was not a surprise whatsoever. Because I remember, I think it was last month, somebody in the Twitter sphere put out a number saying 6.1. Expect next month's 6.1 figure, and I was talking about that well before now, so I'm not surprised. But then again, it's alarming to some, but it's still a lie. Because also there's other people, of course, John Williams Shadow Stats talking about, more like 14, 15%. And then I was even watching Peter Schiff talk about, what happens when the numbers continue to increase to where they start talking about, double digit figures like, 10%, 11%, because as of now, there's no way of really, reeling that back in. And then how will the markets respond at that point? And then the most crazy thing about all this is the fact that the dollar, the Dixie, is actually rallying, and also at the same time that inflations are high. So the question is, what in the world is going on, man? I pulled up I'll
try to explain that.
Yeah.
You see the dollar is going up against other fiat currencies. Mainly, I think because people actually in the markets expect the Fed now to have to raise rates more aggressively. But can you really see the Fed raising rates 3 times or 2 times next year? I can't. If they start doing that, the whole thing will implode.
Yeah.
And the other thing that I would point out, the dollar is not rising versus real money, i.e. gold or silver for that matter.
Right.
We've had a very good week for gold, and not only in dollars, but as the dollar is going up versus other fiat currencies, we've seen the gold price break out in euros and sterling, in Japanese yen, all the major currencies. So I think that's very bullish. I've said many times that the dollar index is kind of a distraction. Yes, you're doing well in dollars versus other trashy fiat currencies versus the money of kings and also the money of gentlemen, which is silver.
Yeah.
You're not doing well.
And then factor in all the equity markets is doing extremely well. At the same time, we got the Dow apparently up right now. S&P 500 up, Nasdaq is up. So yeah, complete upside down world. So expect more craziness because nothing makes sense. But so the question is, from this point forward, what will next month's figures be? Like what they say it's going to be 6.4. Because I remember starting over the summertime, it was 5.4, 5.2, 5. Now all of a sudden 6.2. So should we expect another a point or 2 point hike from their fictitious numbers, or what do you think?
Well, I'm not sure. I don't know what the expectations are. But
Yeah.
one thing I know is that the biggest component of CPI is owner-occupied rent, which is like a fiction, really.
Yeah.
It's not real rents that people pay.
Yeah.
They basically do a survey and call homeowners and say, if you had to rent your house, how much do you think you would rent it for? And the latest owner-occupied rent component of CPI that was published this week is only like 3.1.
Yeah.
As you can see, during the '08 crisis, it was above 4. And I have viewers, well, specifically one in Virginia, and this viewer has a lot of rental properties, and he said the rents are going up like crazy.
Yeah.
And he's going along with it because there's a lot of demand. So 3%. If I asked him if his rental income is going up by 3%, he'd probably say no, more by like 30%.
Yeah.
So I think, and I've seen as well that don't know if you got like something from me about fertilizer.
Oh yeah. Let me grab that
I
real
think
quick.
they've gone up like tenfold this year. So I think food prices, that's going to be a problem as well going forward, because you need fertilizer when you're planting crops, and you're going to get lower crop yields. So it's a little bit of a nightmare. And I've said a few times now in the last few weeks, when the money or the currency is going bad, everything goes bad, because the currency is always one half of every transaction. And I'm not surprised we're getting so many problems. So maybe now you might want to talk about the geopolitical side, because I think that has a lot to do with all the unraveling that we're seeing economically and also politically in the US.
Yeah. So I guess the whole Belarus situation, I read through a little article talk about migrants and whatnot flooding the borders through Poland or whatnot, and they're trying to slow that down. So Russia stepped in because that's one of their allies, and looks like Germany now is talking about sending some hypersonic missiles in that direction if need be. So just the fact that there's a lot of threats being thrown out there. And then I also saw that looks like the UK is sending a small team of British troops deployed to Belarus as well. So could this be that
because
ultimate
of the migrant crisis? And some people here in the UK would, I saw a tweet, they're sending troops to help the Polish border, where he said they're letting all these migrants in through the English Channel from France. They'll help the Poles, but they won't protect the borders in this country. And about Belarus, a tenth of the natural gas from Russia that flows into Europe flows through Belarus, the pipelines. And the president of Belarus, Lukashenko, he's threatened to turn off the pipeline because the EU wants to they want to impose sanctions on Belarus, because Belarus is allowing these migrants or refugees to go into to go to the border, and they're not taking them back, so they're stuck at the border. But also, the more important, I think, geopolitical news out there is about the Ukraine, and how the U.S. now is saying that Russia could invade the Ukraine, and also the U.S. has been sending like some big warships to the Black Sea. The Russians see this as provocation. And I think the old dictum about when everything goes wrong, the next step is war. I think Jeff Celente says a lot of that. And I hope it doesn't happen because a war with Russia is not like a war with Gaddafi or Saddam Hussein. And it's interesting because this thing with Russia, I look back to August, I think August 24th. You probably remember it when the Russians and the Saudis announced they have a new deal, defense deal. And I was wondering, is that a reaction to that? Because this is a threat to the petrodollar. And it could be because, and politically as well, I think your administration, that you could tell us a little bit about their ratings. I think it's rock bottom, isn't it? And they had that election in Virginia.
Oh man. So once again, so it's the politics in this side is such a joke because everything is focused, from the deep state DC crowd on passing that Build Back Better agenda. So as of now, it looks like it's moving forward. So I don't, that's the thing, like these ratings come out from these agencies as if it matters, as if like, if it gets to zero, then we get the, a new president or new vice president. But as of now, I've stopped paying attention to numbers because they're 40% for Biden and 28% or something for Harris. And she's just a laughing stock. Like nobody really respects these individuals whatsoever, but they happen to be the so-called leaders of our country. And it's a shame, but it just plays into the fact that nothing really ever makes sense. So I don't really get bothered by it anymore. Because
that's why it's dangerous though, Mike, because they are like they've got no credibility. So what's the best thing to rally the whole country behind the president? War.
Go to war. Yeah. And that's the thing. Like this is
even though I think a lot of people are not going to buy into it, because I think what's happening in the Ukraine, it's to do more with like a breakaway region, which is near the Russian border called Donbass.
Yeah.
I think the U.S. administration is making it seem like the Russians want to invade the whole of the Ukraine, which I don't think is true.
Right.
But,
so here's the next thing. So based upon all this crap that they're throwing our way now, remember also war is always profitable, and it's another market booster / economic driving force to where it can further push more of this need for stimulus and aid and stuff like that. So that's why I would anticipate that happening sooner than later. But the problem is it's not going to be no short, quick, drawn out war. Like it's going to get nasty real quick because you have all these allies coming in. And I saw somebody mention Russia and China buddies. So at the same time that's happening, you're going to have the whole Taiwan situation. So China might go ahead and, decide to do what they might want to do there because you have to be distracted with Russia and helping their allies. So, world war type events could be unfolding. So, but this, Chris, I appreciate you. Let's see what this is. It says, what will the government and Fed have to do to save the USD? In your opinion, should the USD be saved or let it die? Thanks. Well, the USD is in my opinion, the fact that it was labeled the world reserve currency, I've been talking about for some time now. It's no longer a reserve asset. Like, nations have already been running from it, the de-dollarization push. But then again, I can't help but mention the whole Bitcoin move as well, where you have more corporations looking to have their treasury reserve assets stored in these digital blips of computer code. So, it's going to die regardless. It's just a matter of how will they try to pull us off. And go ahead. I'm sorry.
No, that's fine. I think, prior to 1971, the U.S. had the world reserve currency. And just after the World War II, because the U.S. had like over 2/3 of all the gold. So that's why the currency was backed by gold. That's why it was a reserve currency. Since 1971, the dollar has been running on oil, I guess the petrodollar, and also on credibility. People, the dollar is seen, and it's also tradition. People use the dollar for international trade. So it's been running on its reputation, but its reputation is quickly dwindling. What would the government and the Fed have to do to save the U.S. dollar? Well, the government would have to cut its budget and raise taxes and run a surplus for many years, for decades to come. And the Federal Reserve would have to raise rates to at least 20%. because the real rate of price increases of inflation, as we know from shadow stats, is more like 15. So
Yeah.
you need to have a higher rate than the rate of inflation to kill the inflation. But that's an impossibility.
Yeah.
So the USD, if you want to call it that, or the Federal Reserve note, it's not salvageable, in my opinion.
Yeah, I agree. And then speaking of which, here's a little article that popped up. It says your money is now losing close to 1% of its value every 30 days, according to the Labor Bureau data. And of course, that's their figures that they're giving us, because I believe we're being lied to by every single government entity, in my opinion. So that's just something to catch our attention. But as of now, everybody is probably wondering. Let me show my favorite graph here. is this thing right here. I always say that Biden will be the last person under this current structure of our monetary system, just because we're already running on fumes from this visual aid here from the Bureau of Statistics or whatever. So, but every president's played their part.
And it's interesting that they've put in a guy in there that's running on fumes as well.
Yeah.
So it's perfect, isn't it?
It's too nice. But then I have to continue to stress the importance of being able to distinguish between the Federal Reserve note, which is what everything is taking place in, and then there's also the dollar itself that comes from the mint. So I like to make sure that there's two distinctions in dollars. You got the paper one and the digital version that they're using as a weapon and the tool. Then you got the silver and the gold one that is printed by the mint, or coined rather by the mint. Yeah. And so one will do extremely bad, the other will be the beneficiary of that. And that happens to be this little item right here. I make sure I always mention this one.
Yeah, and I would argue though that the coins they're minting at the U.S. Mint right now are not the ones that are, how can I say, prescribed by the Constitution and the Coinage Act of 1792, right?
Yeah.
They need to be a certain weight and certain purity. So yeah, I've got here. What year is this? 1921 dollar. So that's a dollar. People say, what is a dollar? Well, that's a dollar there. The dollar that we have now is an imposter. It's just a piece of paper or a digital entry.
A debt receipt. That's unfortunate, but it is what it is. So understanding the distinction between those two assets there will definitely do you well in the future. But let's get some questions, because we still have more stuff to talk about. But let's see if we can throw out some questions or whatnot. Feel free to throw out some thoughts or whatnot. And then also, I think the Evergrande or Evergrande, however that stuff is, however that's mentioned, is also a major subject a lot of people are focusing on, because is it official? Is it not official? I would just go with the worst case scenario, mention that they're not going to be able to pay back $300 billion anyway. And the fact that they're going up until the last day until, for some type of payment to be received is like, do you really want to believe that or not? So, but that's just my thought there.
I saw low blood pressure.
It says, where's a $1 trillion coin in this Constitution?
There is. Oh, yeah, you're right. It's just a sham.
Yeah, they could throw out anything. And actually the headlines are run with it. And people talk about it like it's actual something for real.
I saw a comment by Michael Saylor the other day. He was doing an interview, and he was pushing Bitcoin as usual, but he was actually pushing the dollar, the fiat dollar. He's saying, it's still a great currency, and it has a lot of room to grow. So how more can it grow in inflation, right?
Oh my goodness, this guy. This guy had the nerve to say that gold is the enemy, and so like he when he said that, I'm thinking like his entire narrative has changed over the last several months, because he used to primarily focus on the dollar itself as being the primary weapon that has as you say, melting like ice cubes in your hand. I'm thinking like, but now it's now gold. Like how did he flip the switch that quick?
And his friends again with the Federal Reserve. Maybe he wants to be in with the bankers. That's why he's
yeah. And then also one of the members of the community sent an article from the year 2000 about Michael Saylor, and it was a revealing of his true intentions when he was 35 years old at that time. And he was talking about his company wanting to create the software that will be interconnected into every human being on the planet. And so when I read that, I kind of took it as that he wants to be a part of this transition of humanity into the digital world. What better way to excite people other than becoming the primary spokesman for Bitcoin? But it was very disturbing to see his thoughts, as far as him wanting to be God in the digital world. I'm like,
maybe he's Klaus Schwab's son.
Definitely he knows a lot more than what we're being told. So
yeah,
that's the truth. But as far as this Evergrande situation, what are your thoughts on that? Because I know you sent that. Let me pull that up here.
So on the 10th, a couple of days ago,
this
German company, DMSA, they're an advocacy group for small investors and investors in Germany. They have been suspicious the last month or so about these last minute payments after the grace period, because every time these payments are made, they don't use any names. They just say, "Oh, sources said it's been made." No one like taking responsibility for saying these things. So what they did, DMSA, actually, they're not an investment firm, but they decided to buy some Evergrande bonds, and they haven't been paid. So they're going to take Evergrande to court. And this was being talked about a lot yesterday. People tweeted it out. I think I spoke a little bit about it. And there's a guy called Jack Gamble, Nobody Special Finance YouTube channel. He's been following Evergrande a lot. And all of a sudden, late yesterday, Bloomberg and Reuters publish an article kind of like fighting against this DMSA statement, because it gotten out there. And they said this time that a Clearstream, which is like a clearing company in Europe, they said that payment had been received by some of the clients. But again, the spokesperson for Clearstream didn't want to give his or her name. So it's still, and I saw Evergrande stock, I think, went up quite a bit today. So I don't know if you remember, there's like a guy in the European Commission, the president or whatever. He was called Jean-Claude Juncker. I don't know if you remember years ago.
It rings a bell, yeah.
And I think during the European sovereign debt crisis, the whole euro almost collapsed back then in 2012. And now, a few years later, he said, well, sometimes things are so bad that you need to lie. I'm not saying that Evergrande is lying or Bloomberg or Reuters are lying, but it sure feels a little bit suspicious. And I just think people need to be careful. I think Evergrande is still a big problem out there.
So it looks like on about Wednesday or so, assuming that's the same time frame, some of those, those fact checking pieces came out, and then of course that would probably led a little bit to this rally here.
Yeah, and today as well, it looked like it jumped quite a bit.
I would just nothing makes sense nowadays. So why would I believe that all of a sudden they are able to make their payments? And then I also saw something on Twitter sphere about the PBOC or whoever the regulators over there are. They're encouraging the executives to sell their jets and their yachts and stuff like that to make payments. So I'm like, okay, that's a quick fire sale. It still won't be enough to cover the ultimate debt. So they're going to run out of funds eventually altogether. Then what? So buying time. All this to me is just meant to buy time and not to be the primary catalyst that causes a major ripple effect. So,
and the reason why Evergrande is also important for us in Europe and the US is that HSBC, which is one of the too big to fail banks, one of the biggest banks in the world, and they're heavily involved with Evergrande. And lately, Jack Gamble, when I interviewed him a few days ago, he said HSBC is saying, "Oh, we're going back into China, investing in China. China's a good place. They're pushing China." And all it seems to me, I remember watching. You probably remember The Big Short. When the whole subprime mortgage market was collapsing, and the price of the CDS wouldn't go up. And people were really frustrated. You remember the traders were, what's going on? Well, that's because the bankers were trying to get rid of all their bad paper. It feels like that right now, that someone out there wants to unwind all their positions and leave it to the retail and people who don't know. They're going to be left holding the bag. I think it's quite serious, this Evergrande things. Of course, you have people who are going to say, "Oh, who is DMSA?" But they bought the bonds and they didn't get paid the coupon.
Yeah, so here's another thing is like with HSBC as well as another one or two banks that are extremely big, knowing that or foreseeing in the future that they're going to have problems, keeping up that Ponzi scheme nature of, taking in funds and, selling it as if like they're actually doing some development. Why would you actually, do that? Unless you probably anticipated at some point, the government would have to step in to make you whole. Because as of now, if everything is built upon the fact that the too big to fail banks are too big to fail, then you'll have to step in at some point or risk the entire monetary system coming down. And so I can see how those people can take those hefty gambles by pumping funds into institutions that they know can't repay those loans. So it's all in the too big to fail bank's favor as of now. So let's get some questions. Feel free to throw out some questions and we'll jump on those. But then also, Mario, I want to get your thoughts on this article right here. Miami to give a Bitcoin yield from Miami coin to its citizens. Have you had a chance to check that out yet?
No, I hadn't heard about that.
So this was announced, I think, as of yesterday, if I'm not mistaken. The mayor who decided to take his paycheck in Bitcoin officially. More mayors are jumping on board. But then again, this is the first little announcement yesterday about using the Miami Coin project, which is their own coin somehow, pegged to Bitcoin or something like that. And they're staking their coin and they're actually allowing residents to use it for payment of, taxes and basically making a legal tender form within the city of Miami. And as a result of that, they've had $21 million worth of activity. And so the mayor is saying that based upon the current trajectory, we'll be in a position where local residents won't have to pay taxes because they can use the proceeds from the dividends and then also be able to have funds to give back to each individual resident in Miami. Of course, they got to download the wallet and get verified and KYC. But so a lot of people are excited about the fact that this is the first city offering some type of yield, calling it like the digital gold, like they're getting oil dividends or something like that.
It seems like more money out of thin air to me.
Yeah,
especially if mayors are getting involved.
Yeah,
I saw. You always have to be suspicious when bankers are also pushing cryptos. I saw a couple of days ago a clip of the CEO of Banco Santander, which is one of the biggest the biggest bank in Spain. They're big in the UK. The lady who was the CEO came out. I see the next big thing is crypto. But 2-3 years ago, the bankers were totally against crypto. They're trying to block people from buying crypto.
Yeah.
But I think what they mean by crypto is their version of crypto, the ETF.
Yeah.
And things like that. They don't want you to have real crypto. And the banker's not going to teach you how to, get your own wallet and how to buy Bitcoin and do all that. They just want to. And I spoke about this in my video this morning. It's not real. And I think it's very dangerous. I'm not saying Bitcoin and cryptos are going to collapse. There's so much talk about it. And very little talk about gold and silver, which I think is encouraging because that means it's still heavily undervalued.
Yeah, I agree. And then also the fact that as of right now, all the cryptocurrency space is denominated in dollars. And so the more dollars they create, the more dollars that are pumped into the system. And of course, they're going after the retirement funds now, stuff like that. So all that's going to be absorbed into the Bitcoin space. So the Bitcoin would actually, and this is the question, this is the tricky part. They're setting it up to be a standard itself, to begin pricing things in at some point. And that's what I think drives a lot of the excitement because it's all for now in dollar terms, but yeah, it's going up because the dollar is going down. So it's like, do you want to miss out on that ride, given the fact that it is, it's being labeled as the best inflation head as of now because it's moving, whereas in gold and silver it's not moving. But it's hard, man. It's tricky to figure out how this is going to end. But once again, it's computer code, so I don't have too much confidence in it in the end.
Oh, I'd rather hold a $1, a silver dollar than you can't even hold cryptos, can you?
Yeah,
And
I'm like,
what will the cryptos be priced in when the paper dollar and everything else implodes.
Yeah. I'm like, I don't mind, holding both, but yet I realize the difference between both of those things. One is something I can hold and feel that I have more confidence in. The other one, I don't mind playing with it. That's for sure. Here's a thought from Edward. Says, if gold didn't rise when the most fiat currency came into existence, how will it go up when the rates rise?
Well, because the rates are never going to rise fast enough to kill the inflation. The biggest move in gold in the 70s was when the Fed started raising rates from around 4.5% all the way to 20 from 1977 to 1980. Or 81. And gold went from 400 to almost 900. Silver went from just under 7 to 50, and the rates were rising. So there you go. But I think this time they can't even raise rates. They won't even be able to start unwinding the balance sheet after they're done with their tapering.
Yeah. So yeah, I'm for some reason I'm feeling like between now and June, when their expectations of being able to fully unwind, it's something's up, man. This war situation might play into it, or anything out there.
If there is a war with Russia, I mean, everything is up in the air. The Fed will start printing again. I mean, I hope there isn't.
And then also, of course, I'm hearing more about the narratives of a physician in the state of Michigan used the word fourth surge because of that event that's occurring and stuff like that. So that's still on the table as well. And then also
some headlines here in Europe. One of the provinces or states in Austria, anyone who hasn't been fully, they've put them under lockdown.
Yeah,
I see that in Holland, for example. They've reimposed a partial lockdown.
Yeah.
Apparently, after 7 p.m., restaurants, bars, and other businesses will have to close. So I don't quite understand how this disease knows. It's 7 o'clock now. We can. It's crazy.
Oh man, I saw a tweet. There was a screenshot from, I think it was New Zealand. I think somebody, the health minister, the health department, whatever, and they were just so distinctive in saying that if you haven't participated, you have to sit down in restaurants. You can't stand up or something. It was something like you can't stand up in restaurants. Only the people who have participated can stand up. And it's like social life, dancing and hanging out.
How do you get out of the restaurant?
Yeah, it doesn't make sense, but it's clear we all can see that it's never been about real health. It's all about that agenda, which they seem to be on track with, man. Somebody said here, I read that Belarus cut the natural gas into neighbors. I'm not familiar with.
I didn't know that. I heard they were threatening to do it, but I haven't seen that they have. I read something in the FT saying that the real power behind the president of Belarus is President Putin from Russia, because that gas is actually is Russia's gas that's coming through Belarus.
Yeah,
they've just threatened, but it would be a problem. It's another problem out there, I would say, aside from all the other ones, the debasement of the currency or inflation, the supply chain, the shortages. I saw they're talking here in London now. There's a shortage of Uber drivers, so that's.
So I saw that they want to raise the rates or something like that. Like, so I'm assuming raise rates within the app. Basically costing more.
You have to because the cost for the drivers, used cars are going up. So if they need to buy a secondhand car to drive, the gasoline prices are going up, diesel prices are going up, and I think their margins are very thin.
Yeah, all those app-based businesses are in trouble. Here's a thought from Ed here. It says, first everyone was saying something was going to happen last summer, then September, October, it's the middle of November, and nothing has happened. What do you think?
What do you mean has happened?
I'm assuming he's referring to one specific event that will be like a game-changing type of event. But there's a lot of things happening. Just not I guess what we were all believing is going to be one catalyst. But
I'm not really sure what he means. I mean, we already have so many problems in the world, like the supply chain, inflation,
yeah,
shortages of things.
yeah.
You might want to call it artificial. Food prices are probably going to go up.
Hmm.
Um, Maybe he's talking more on the political side. I don't know.
Yeah, Ed, let me know exactly what you mean. And then here's another event I want to talk about. Here's just some more news about what's happening here.
Low
North,
blood pressure's got a question for me.
uh,
Do I have a plan B to get out of London? Not really. I'm, I'm not too. I'm quite. I'm in the outskirts, so I'm quite close to the countryside, for example. So I'm not concerned.
mhm,
Where would I go? That's the problem. Low blood pressure. I think the old saying, "The grass is always greener somewhere else."
yeah,
I know in the States you have a lot more choices. I know people are looking to move to Florida and other red states,
mhm,
or to move to more rural places. But here in England, it's not so easy.
mhm,
Uh, so um, I'm okay here, and I think we're already going through the collapse. It's just that they are using other crises to make it seem that we aren't.
mhm,
And I think if we get through the next few years, we'll be fine. But
yeah,
and there will be a lot of opportunities. I think having gold and silver is a huge opportunity. I know cryptos have done well, but I think a lot of people are going to be regretting that they didn't get more their weight up more
yeah.
in silver and gold.
I agree. Here's a question from Miles about the UK. Says status of food and energy in the UK. Have you heard of massive amounts of bombings in China? Two questions there. Mario, you can speak on the UK side of things. In China, I'll look that up, but I'm not familiar with that as well.
Yeah, the we had like energy. We had problems at the gas stations a few weeks ago,
Mhm.
but now it's things are fine. We don't have shortages of that anymore. But what I've noticed is that gasoline and diesel prices have gone up a lot after that crisis. So maybe they use that as a cover, as an excuse to raise prices. Uh,
Mm,
and the food situation is okay right now in the supermarkets. It's not a problem. But I've noticed that prices have been going up quite a bit, maybe
yeah.
not as much as in the States. And about massive amounts of bombings in China, I haven't heard about
Yeah,
that.
I looked that up, and nothing new pops up that I'm aware of. So that might be some alternative, deep under the cover type stuff. But let me know if you have any specific events you're referring to. I haven't heard about that. But there are also one of the things that concern me, and this goes back to the question about the Plan B side. I've been watching Puerto Rico because that's one of my favorite places to just like hang out at. But yet, Puerto Rico has turned into like a mini Alcatraz, to where the restrictions have become so tight and so burdensome, to where coming and going now you got to test and show paperwork, and they check in and text you and monitor you and come to your apartment. And I'm thinking like, wow, it's a prison. I mean, apart from the fact that you still are got good weather year round, but I think if this agenda continues to progress, living on islands or whatnot will become very hard if you're not participating, because you won't be able to leave at all, and that's going to be like
Yeah,
I don't know.
it's a bit like living we are on an island here,
Mhm.
Great Britain, and I feel like I'm in a prison because unless I take all the procedures, and
Yeah.
unless I test, unless I get like a digital pass, I can't really travel anywhere anymore.
Mhm.
My sister, she's in Switzerland, but she's got her daughter and grandchildren in Florida,
Mhm.
and I can understand why she did it. And so she was able to go to Florida, but only a couple of days ago, because before that she couldn't.
Mhm.
But
So they went for vacation
no,
or
she went there, yeah, vacation for a month to
yeah.
spend time with her. She's got two little granddaughters, and my niece is married to an American, so they live in Florida. But she had to wait till now
Yeah.
because I think it was just a few days ago that Americans opened up. foreigners, but you have to be
Participated.
doubled,
Yeah.
or maybe next year will be tripled or
Oh no.
quadrupled, or
Yeah. Certain countries already is triple, like, you know,
yeah.
like.
So where does it all end?
Right, and that's the thing. But
So
and that's.
I spoke to my mother yesterday in Switzerland, and she said, "Yeah, you're not going to be able to travel then." I said, "Yeah, I won't."
Yeah, and that's the whole intent, to make your life so to burden you so much to where it's very uncomfortable, where you have to comply at some point in the future, and that's why
you give up.
Yeah,
But
you give up, say skip it. I mean, go, yeah, and that's where
you give up, and you give in, right, and you take the procedure. But I hear that in the UK as well, in the care homes, there's like 60,000 people that don't want to get the
participate. Yeah,
procedure. NHS as well, they're having problems getting people. They delayed the mandate for the full thing up to April next year. So how's that going to improve things? So they think that they can convince people over the next 6 months, but I see there are problems in the States as well. A lot of people are refusing.
Yeah. And a lot of people have stood up, man, and decided, hey, I'm not going to take it. I'm going to lose my job. And so there's videos of people laying down their, whatever their tools or jerseys or their uniforms. And so, yeah, it's good to see. It's sad, but yet it's good to see. But that provides more opportunity for the people who are not participating to start standing up for their own, protecting their own, developing our own type of ecosystem outside of this mainstream narrative. So here's another thought as well from Ed. I want to put that out there. It says, I heard someone say that resetting the gold price really high is the only tool the Federal Reserve has left.
Well, yeah, I guess so, because the Federal Reserve values the Federal Reserve has gold certificates on its balance sheet.
Yeah.
And that gold is the gold that is partly at Fort Knox and West Point, right?
Yeah.
8,100 tons that the U.S. supposedly has.
Yeah.
They value that at the statutory price of $42.22.
Yeah.
So that's valued right now at 11 billion. So let's say the bond markets, interest rates and yields start going up, all the bonds on their balance sheet and mortgage-backed securities, they start going down in value, and their balance sheet, the value of it collapses. They could revalue gold and take it from 42. And yeah, they could make it so that they could let the market price of gold go to a level where the Fed's liabilities are 100%, let's say, backed, or gold backs the Fed's balance sheet by 100%. And I think the last time that happened was in 1980. And actually, the Federal Reserve's balance sheet was more than 100% backed by gold. So when that happens, then that it's probably a good time to maybe exchange your gold for another asset. But I don't know what that price will be.
Yeah, and that's the thing. Like, at this current moment, other than having those certificates on their balance sheet, I imagine the actual bars themselves have been, leased out and
Many times
where them things
over,
are at. Right. So I don't see that happening. And based upon all the activity out east with China and Russia, what they've been doing, I'd imagine that they might be the ones that actually set the price, because they can actually probably show you some stuff rather than just talk it. So, but we will see, man. What else we got here? Let's get ready to wind down, I guess. What else? Let's, any other thoughts come to mind as far as what to expect for the rest of this month, heading into December? That come to mind for you, Mario?
This month to
Anything
December.
else on the horizon to be aware of or to keep our eyes on outside?
Yeah, I think the geopolitical situation, it looks like that's this next crises are the powers that be, want to put us to focus on. And also the health crisis. I think I'm starting to see some headlines about cases going up in Austria, the Netherlands as well. But also the debt ceiling, I guess, beginning of December.
December 3rd. The 3rd of December. Yeah.
So, but apart from that, I mean, I think we're going to start seeing another crisis. We had the energy crisis a few weeks ago. We've had the shipping, crisis, like
That's still
supply
ongoing.
chain.
Yeah.
So I'm sure there's going to be, just expect more and more mayhem, I guess, unfortunately, and
Yeah.
batten down the hatches.
Yeah. Yeah, man, it's unfortunate. This thing heading into the holiday season and trying to remain cheerful and enjoy the time you have. Yeah, because there's gonna be more enough stuff to talk about. But in the meantime, as of now, gold and silver are still undervalued extremely. And so with I think
Oh
silver
yeah,
at $25 or so, that's good news, but is it really? I don't know, because it's
yeah.
what are you gonna say?
Despite the fact that we've had a very good week this week for precious metals, yeah, we're still heavily unvalued, gold and silver. So yeah, you still have time to get some. And I was looking at the prices here from the major dealers in the UK.
Yeah.
Uh, it, the premium for gold, for example, for sovereigns, they're about 5%. That's if you get 1,000 sovereigns, which is 1,000 sovereigns is like $500,000 worth of sovereigns. But if you get 2 or 3 or 5 or 10, the premium is like 7%, which is very high. So I think there's a lot of tightness. I heard Andy Schecter saying he's having a tough time source silver. After silver, I think it will be hard sourcing gold.
Right. So just basically expect higher premiums.
Yeah.
You're going to pay more paper units for ounce, regardless of the spot price, which is what we were expecting anyway. So, well, everybody, we appreciate you guys hanging out with us. If you've enjoyed it, hit the thumbs up button, Manico64 on YouTube, and go check them out. If you, of course, everybody here to know who you are. But anyway, if you happen to be new, go check out Manico64. And other than that, Mario, it's always good to connect with you, my friend. Let's keep plugging along. Have a good weekend, and you guys be safe, and we'll see you guys later. Peace.
Peace.